Wage growth is linked to productivity, and UK productivity has been depressed for a significant time. And also, there's been a lack of investment. And of course, they go hand in hand. If you don't invest, you can't increase your productivity. Well, what's the elephant in the room? Something that we're not supposed to mention. Well, in order to invest and boost productivity, and that applies to all companies, particularly the majority of companies, which are small companies, small, medium-sized enterprises and very small companies. In order to do that, you need money. Where do companies get money from? Particularly small firms, which account for the majority of employment. They're dependent on bank loans. And that's where the UK has had a big problem for the past century, but it got worse in the past 15 years or so, since the financial crisis 2008. The problem is this concentration in the banking system. We've got 5 very large banks, and big banks want to do big deals with big companies. They're not interested in lending to small firms. And of course, the big banks are closing branches. They don't anymore have local managers there dealing with companies for corporate loan applications. It's been centralized, and the small firms drop out because it's harder work and it's not profitable. What you need is small banks, many small banks, local banks. Now, if we compare the UK with Germany, this becomes very obvious, because Germany is a very similar country in many ways, but productivity has been much higher, investment has been much higher, growth has been much more stable, and wages have been rising much more, wages and salaries. And the difference is, instead of having 5 big banks like the UK, concentrated banking system, these big banks accounting for almost 90% of deposits, in Germany, these big banks account for 15% of bank deposits, and the vast majority are over 1,000 small local banks, community banks, which only lend locally. They're small and they want to lend to small firms, and that's how you make sure the majority of companies has the money to upgrade to the latest technology, invest, boost productivity, and then you can pay much more. And of course, you'll be also much more successful internationally. German exports, of course, have been very strong, almost as large as Chinese exports in absolute terms. But a big chunk of that is actually small firms, so-called hidden champions. Germany has more than any other country of these small firms, SMEs, small and medium-sized enterprises that are global market leaders in their market niche. And that's because Germany has the biggest density of these local small community banks that only lend locally. That's how you boost productivity, that's how you boost wages, and that's what we need to do in the UK.